Okay, guys, I'm getting antsy here, so I'm going to start 1 minute early. So, welcome to the After Hours special with Charcal DINZY. Basically, we have been able to open up to new members lately, and we've been getting tons and tons of questions lately about how the room works and how, you know, different things that I thought maybe these questions were not just ones that some people had, they were probably questions lots of people had. So, we'll record this. It will be a little bit of an FAQ on, insights into how things run and how our minds work and our charts work and things that you can review if you're wanting to set your things up differently, or if anybody's new and they want to come in and be able to have that to go over. So if you have anything that you want to add desperately while I'm talking, just I will check the chat, so you can just write it in general chat and I will um, try to get to that too. I do have a list of questions and things to go over. So the first things I wanted to go over, straight up, just Dan goes live 9 a.m. Monday through Friday from 9 a.m. to 10:45, and then at 3:15 again for the end of the day. Monday through Thursday. Fridays he does not go live. There is a reason for that. When he trades himself personally, he usually finds that Friday afternoons are quite slow, and so he doesn't like to trade Friday afternoons, and for most people he doesn't recommend it either. So he decided not to do Friday afternoons, and he does weekend videos anyways. So there's that. That's first. Okay, in terms of setting up things, so if you're trading crypto a lot and not trading the stock market, obviously when the stock market opens 9:30, Dan goes live. But if you're trading crypto or you live in a different time zone, go to your notifications settings here, go to your preferences, and especially if you're new, there's going to be things that you want to change within here. First of all, you never want to be notified about all new messages, because then your computer and phone will just be buzzing all the time, incessantly. So direct messages mentions keywords, things that you want to be aware of. And then keywords. So using keywords. So you can type in TCG live, because Dan puts that every single time that he goes live, and you will be notified that he is going live. You can put in your favorite tickers. You can put in names if it's somebody that you want to make sure that you see what they're writing. Let's say you're following a ticker, you want to be notified every time somebody talks about it so that you always know what it says. All those can be put into your badges here so that you are set up how you like. So that's first. And okay, the second thing is, if you're new, and even if you're not new, a lot of people don't realize how many channels we have, and some people are missing them. So go through the run through, make sure that you're in all the channels you want to be in. If you're in crypto, there's 4 different channels for you guys. Swing trade is now every swing trade. Options activity, if you're trading options or looking for high beta names that you want to play, the options activity posts amazing different things. Keywords, bull break, yeah, that works too. So just make sure, trade review, we post charts, things that we're looking for, setups that we're watching, or things that we want to go over for things that we've learned. So if you want to learn from other people's mistakes, videos, whiteboard. I think that everyone needs to make sure that every single day, if you talk about, setups and what do you do in the morning? What's my setup in the morning? Dan does a morning setup for everyone already. He does supports and resistances for all the Canadian MJ names. He goes over the biggest names that we play as far as tech sector, banks, high beta names, SPY, everything like that. He tells you everything that he's thinking that morning, and he does it all for you. So if you're looking for things to play, absolutely, you must be reading the whiteboard every morning so that you know what's on watch and what you should be looking for. When and who do we ask questions about the charts? So all questions about charts, any tickers, should be posted wherever they belong. So if you want to post them in general chat, especially during market hours, that's the best place to do it. Obviously, if you're, doing Canadian stocks, marijuana sector, Bitcoin, whatever it is, any ticker requests, just post in the chat, and you're going to have Dan, myself, and then tons of other traders who are watching those same tickers being able to provide you with key support and resistances. That's the beauty of this community, is so many people watching the charts and being able to help with any questions that you have. whether it's simple of what's the next resistance, what's the next support, whatever it is. All those things should be talked about in the different channels. Fundamental information. So people will post. There's tons of fundamental information being posted all the time. That's when you can use your notifications for tickers if there's something that you want to be specifically aware of. Arlene does an amazing job posting upgrades, downgrades, earnings, big news releases in the mornings. The marijuana sector is full of people posting all the different fundamentals, Bitcoin sector as well. So there's tons of fundamental stuff being there. So I suggest that if you really have a certain ticker that you're wanting to keep an eye on, that you put that in your notification so that you'll know every time there's a fundamental something being discussed on that ticker. When should you direct message somebody or versus using the main channels? In general, as long as it's ticker related and as long as it's a question that anybody could be helped by seeing the answer, then it should really be posted in the main chats. Obviously, if you want to tell us about the amazing things TCG has done to help your life, or how somebody has helped you, or if you want to say a nice word and you want that anonymous, obviously send us off those wonderful messages. We love to hear it. If you're struggling, if things are going really bad and you're embarrassed about it, obviously those are also situations where direct messages come into play. And, and if you want to take a chat, talking to somebody, if you need to swear, if you need to whatever, that all stays out of the main channels. We keep it very clean. But other than that, anything that can help other people. So if it's any question about any ticker, if you think that it can help somebody else, please post it in the main chat. So you're going to get tons of input on it, and you will get the best answers always there and the fastest answers there. We do not recommend buying and selling stocks. Our goal is to empower people to take charge of their own financial success, lives, whatever it is. Basically, we want you to learn how to do it. If we told you when to buy and when to sell, you would never be in charge of anything. We don't want people dependent. We want people being free to know how to manage their money, how to trade any stock in any market at any time, because they have the tools and things that they need in order to do that for the rest of their lives. When should I? Okay, we'll go through that later. So, so trading view setups. So let's get a lot of questions on how I and how everyone sets up their charts. So, and this is my most asked question, my beautiful MACD here. How do I get that? So first thing to do to get that MACD is you're going to go to indicators. If I even know what indicators is, this one. Okay, indicators and strategies. In the search box, you're going to type in MACD. Okay, and you're going to pick this first one by Chris Moody. We very much like him. Thank you for doing that wonderful MACD. I'll throw it up again so you could see. So when you put it up, you're going to get it looking like this. I prefer not to have all that stuff. So I go into the settings and I take it all out. So I don't like the dots, I don't like the lines, and everything else I'm good with. So I click OK, and then I have my beautiful histogram here of the MACD, which I prefer much more to a MACD. I don't really pay attention to MACD crosses just because they're a lagging indicator, and so I like MACD a lot, this one for divergence and strength of moves. I use it for that. So time frames. And in terms of other ways, well, let's just do all the chart setups first. So how do I set up my charts? So I like to keep my charts fairly clean, but that's because I like to make them fairly messy. So I will use, as far as my indicators go, I like having Bollinger Bands. That's a preference for me. Not everybody likes to have them, but already I would always have the 20 period moving average on my chart because I think that that's a very important one to have. And that's with already put in when you do the Bollinger Bands. And what I find is that I really enjoy how the Bollinger Bands frame a chart. It's almost like having a picture that on a blank wall, and when you put the frame, it stands out from the wall. And I like how the Bollinger Bands frame the chart. I find that it makes it faster and quicker for me to see things. I don't even know why, but it does for me. So I like having that. And then I usually keep one exponential moving average on there. So you will find lots of people who like having, 100 period, 200 period moving averages, etc. I keep one exponential moving average on there, usually the 8. The 4 is quite tight. You can keep the 4 on there as well, especially if you're doing the TCG cross using that. So, which I'll go over. TCG cross is basically when a bull cross would be when the 4 period exponential crosses over the 8 period, and a bear cross would be when the 8 period crosses down over the 4 period. So I keep usually one of those on my charts. And the reason, so like I said, so I make my charts very messy. I love to draw lines. I keep lines frequently on charts simply because I find that they play out time and time again, and I use them as supports and resistances. So some of my charts will end up being very, very messy. And so I like to not have too many other indicators on there, because otherwise I just won't be able to see anything. So yes, it looks like this makes no sense. Probably doesn't make sense to most people. That's fine. It doesn't need to. And if you want to use more indicators, by all means, go ahead and use more indicators. But in general, my charts will look like this until I muck them up with different lines. So time frames. What time frames do I use and most efficient to use? I use every single time frame. In general, I don't need to look at weekly time frames just because I'm looking at charts every single day, and so I already know the weekly time frames, sort of what they look like, and you can judge it based on the daily time frame. But if you don't know the weekly time frame of the chart that you're looking at, if it's a new chart, something you haven't looked at, weekly time frame, quick glance, gives you the idea of just the overall trend. Okay, so you always want to know what the overall trend is, because you need to know if your trade's going to be against it or with it. I always look at the daily time frame because I like to swing trade. I like to know if I'm playing with momentum behind my back or whatever it is. And my favorite time frame to keep up at all times is the 15-minute. So I only use the 2-minute time frame usually in the first 5 minutes of the trading day, especially for very volatile names like when I trade WED. I like to have the 2-minute time frame up to frame the first 5 to 10 minutes of the day, and then I'll switch to the 5, and then by half an hour in I'll switch to the 15, and I'll just play from there, because I find that the 15 is the best in terms of my style of trading, which is that I don't play 5-minute trends so much, and I usually don't play 2-minute trends so much. That's kind of scalping is too fast for me. I don't like to do it. Well, I like to do it, but I don't do it often. I won't sit here and lie. Apparently, during my swing trading video, I said I swing trade 90% of the time, and then the next day I went and made 8 day trades. So that was just lifestyle. But whatever it is, I trade based on what I can do that day. So maybe a 5-minute chart will give me a setup if I know that I'm day trading. But in general, I don't use anything. I don't really trade on anything less than the 15-minute time frame. But I'm always keeping an eye on every single time frame I click through. I'm never not looking or knowing what it looks like on the higher time frames, because especially for swing trading, you really want to be aware of how that looks. Hourly equilibriums are probably my favorite thing to play, so I'll always be looking out the hourly time frame for those as well. Different tool emphasis for different setups. So obviously for an oversold bounce or anything like that, then I will use RSI, obviously, more so than moving averages, I guess. I don't really use different tools differently. I kind of use them all the same. I like to see RSI moving in the same direction as the move. I don't like to see, too much divergence showing or whatever it is if I'm expecting a certain move. So I don't really change the tools that I use. I use them all equally, and I keep them all at I keep them pretty simple so that I can use them all the time to make my trades work out that way. Do I have a checklist prior to making my trade? It's not a checklist that I have written down. It's not something that um, that I go through and say, yes, 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 yes. It's sort of, based on experience. If I know that I want to enter a trade or not, that's how I would come up with that checklist. So I guess the things on my checklist would be, what's the time frame of my trade? Do I have a target? Am I playing this for a day trade? Am I playing it for a swing trade? What am I basing my entry on? Do I have a support nearby? Is this an oversold bounce that I want to stop out? Do I want to scale in? So, I have those things that run through my mind, but they're already sort of predetermined. So if I'm playing an equilibrium bull break, I don't scale in. I make it one shot. If I'm playing an oversold bounce, I always leave more of the position that I want to take to scale in lower in case things get, overly extreme. So I do have that kind of checklist in my head, but it's based on the different kinds of charts and patterns and things that I'm playing. Always wanting to know, if the 5-minute or 15-minute RSI is oversold and I'm wanting to initiate a bear position, then I might wait for a bounce. So, simple rules like that to make sure that you're not getting into positions that you're too far away from your stop or anything like that. Scaling and position percent size. So I only scale in as far as an oversold bounce. So generally you don't want to have to be averaging down a trade. That means that you're in a losing position. But when things are all out dumping aggressively, then I absolutely scale in because I know that they can always get more extreme than I expect them to. And usually, you're hoping that you could at least bounce back to where your first scale was. So all the ones below will make the money and, maybe one comes out break even. Position size. Position size is really up to you, and I go over this a lot in the swing trading video, whereas you don't really want to be risking more. Usually experts say that you don't want to risk more than 0.5% of your entire portfolio on any trade. Obviously, for day trading certain positions, you still don't want to be risking that much, but that's why you would, let's say, scale in if it's an oversold bounce, whatever it is. The other way that we can sometimes get around that is by taking an initial bigger position, and then if you see immediate follow through, that you take some profit off so that you can be closer to your stop as far as the profit that you've already taken. And if you want to go in a heavier position size, then you need to put your stop break even so that you don't lose money. So that doesn't always work for every trade setup, especially if you're swinging. Usually the stop's a little bit farther away, so you really do need to manage your position size. How do I do a quick risk reward evaluation? That's where it comes into play that you need to have your exit established before you enter the trade. And what I find is a lot of people will see a break of whatever pattern they're looking at and they'll enter the trade, and then they don't actually have a profit target in mind as far as where the trade could likely go. And again, I go over that in the swing trading video as well, how you can calculate sort of where your risk reward is at. Like for an equilibrium, you're looking for maybe the base of the initial surge up as a height. So if let's pick our nicest equilibrium that we had, which was the Twitter weekly equilibrium. Okay, so we had this move up, $14 move up, down, equilibrium bull break. So the height of this move for the $14 move was the height that we were looking for from the break 33 to 47. So quick estimation of how an equilibrium would look. That would sort of be how I would do that. Okay, confirmation candlesticks. So confirmation candlesticks. So we have one right now. So Bitcoin right now had a bullish reversal candlestick here, and it's currently not being confirmed. Okay, so what you want to see after a bullish reversal candlestick would be the candlestick being confirmed. So here you have a bullish reversal candlestick, and that being confirmed, leading to more upside. So the confirmation is key, especially if you're, when you're trading on that time frame. What a confirmation candlestick will mean is that you have a higher low and a higher high on a shorter time frame. So a confirmation candlestick on an hourly time frame likely means that your 5 or 15 minute is getting higher lows and higher highs. When you're not getting it confirmed, what it's meaning is that you have bounced, topped out, and then you're coming back down. And so obviously that's not when you want to be entering a trade. You want to be entering a trade when you have, some time frame going in your direction, whether it's the 5 minute, 1 minute, 15 minute, whatever time frame you're trading on. So if you're looking for this hourly, let's say we're looking right now, Bitcoin just dropped, it lost the support. So if we go to a higher time frame, we're looking for some new support on that time frame. We're only going to know that we have that new support on the daily. I think daily's looking for a higher low right now. Okay, here we go. Daily's looking for a higher low. So what we're going to want to see before we know that the daily higher low is in is at least an hourly higher low and a higher high, but it's going to start with an hourly confirmation. So we cannot say anything about whether that daily higher low is being set because we are not even confirming that we're going to go up and set a lower high on the hourly so that we can set a higher low and a higher high. So far, all we've done is had one bullish reversal candlestick and having absolutely no follow through. So we know that the bears are still in control of the shorter term time frames. Basic fibs, when and how to use. So I use fibs, and I've said this many times, and I'll say it again, which is that I use fibs because I was always eyeballing targets for equilibriums and for other things. And people were having trouble replicating what I was doing and what Dan was doing because he was eyeballing targets as well. And what happens with fibs is that they are naturally occurring in the entire world around us, and our eyes are drawn to them just as much. So even though Dan will say he doesn't use fibs, every time he's telling you his eyeball target, I guarantee you it's right near a fib. And most of the time that I was using my eyeball targets, they tended to be near fibs too. So I use them in a very rudimentary way. I usually set my target and I eyeball it first to see where I like it. And then I use the fibs as sort of like exact numbers, confirmation, whatever it is. And I don't use them in terms of determining a gazillion waves of anything. I use them as far as momentum goes. So if we look at oil here, we'll see that oil made a big move up. So I'll say, okay, I'm not going to enter here on oil. I'm going to I might decide to short, which I actually did at the top of this trend line, and decide on a profit target based on a fib retrace. Or I might decide that I want to go long on oil because the weekly chart's so bullish, but where do I want to go long and have risk reward in my favor? So what I would do is I would take the low of that surge, go up to the top of it. Okay. And then I would see where the numbers line up. So you can see this first time we bounced near the 0.5. So it gives me targets of where I want to line up. And you can see here we bounced right off 67.08, which was really nothing. So clearly didn't work that time, but that's sort of how I would determine where I would use it. Golden pocket. So the golden pocket is sort of the most, it's considered like, the strongest base of support as far as a retrace. So if you look at this oil move, your golden pocket was going to be between the 618 and the 0.65, which is right under it. So we'd be getting a range sort of between, let's say, 68.06 and 67.50 or so. And that is called the golden pocket. Okay, and you can use them the other way too. So then I'll see that we had this big move down. I'll say, okay, I want to play an oversold bounce because it got oversold, heavily oversold on the hourly time frame, obviously on this dump. So I'll put it to the high, I'll put it to the low, and then I'll see, here's a target. Okay, this one worked out perfectly. We hit the 0.382, so 70.20. We topped out at 70.17 or so, and then pulled back from there. And again, I don't use it as the only thing that I use in order to play. I use it more beside myself. RSI is a live indicator, yes. Okay. Okay, more common patterns. So I would say that I would say that the most common pattern that we see is an equilibrium pattern. And then beyond that, we see usually wedges. And almost every name that we play on some time frame fits into one of those patterns that we're looking for. And they're incredibly useful because especially equilibrium patterns, probably the easiest pattern to play. Um, Probably the pattern that gives the most follow through, and very, very clear support and resistances. So, okay, what does a given pattern imply about future price movement? So, we don't assign a direction to certain patterns, but they do sometimes have direction. So, an equilibrium pattern is more likely to continue in the direction that it was already coming from. So if you see, let's say we'll go back to our Twitter equilibrium, we saw that we were in an uptrend equilibrium pattern. So chances are better that it will break into an uptrend. So it does sort of give us that, there is a little bit of a bias towards the direction we are coming from. We can see, actually, Weed has a bunch of nice ones. So we had, let's say, our Weed daily or weekly equilibrium here, high, low, that we were playing. Okay, so we were playing within this weekly equilibrium. It had been coming off a strong uptrend, so the chances were better that it was going to break bullish. So we could see here's our equilibrium. We broke bullish. Then we go to the daily time frame and see that we had this big pullback from all-time highs and form this little equilibrium here. So because we are now coming off a down move, it was more likely that that equilibrium was going to break bearish. And then you see follow through. So now we're setting up with an equilibrium right now also. We're technically setting up with that equilibrium off this up move on the smaller time frame. So, on the 4-hour time frame, it's on an up move, so I would be leaning bullish in that direction. But on the daily time frame, I might be leaning bearish simply because we're coming off a huge down move and we can't even get a higher high, which is quite weak. So carefully watching both directions as far as that goes. Double top. So double top just means that it's an area of very strong resistance. So how do I play one? So you have two things. So you can top fish a double top, which means that you take it short and then you exit if that breaks. And then or the other way to play it is that if you have a double top, then you play the break of it. So if you have two clear resistances that are at the exact same level, it means that it's very strong resistance. And the likelihood that if you get over it, it will be accompanied by extra volume is obviously much higher. Same with double bottom. So you can bottom fish off of it, meaning that you can take a position hoping that that support will hold and then exit if it breaks. Does it matter how far apart the two candlesticks are? Yes. So if the two candlesticks are two candlesticks right together, like let's say on a 5-minute time frame, I really don't consider it, but if you have a 5-minute time frame that runs up, or any time frame, you can see here like that you run up, you hit a top, you run up, let's pretend that this is the same top. It almost is. It was a wedge anyways. Okay, you hit the top, and you keep rejecting from it. Then you know that when that breaks, which it did here, you're going to see nice follow through, which we did here. Oh, you don't know, but you hope you're going to see good follow through. I do not use a scanner. I do not use alerts. Other people, however, do. So, okay. So I don't use a scanner because I use ChartGuys. So I cannot possibly look at all the tickers there are to look at. Some people enjoy doing a scanner and stuff. I don't enjoy using a scanner. I just enjoy looking at the charts. So I rely heavily on people posting charts here that I can then take a look at in order to play. Alerts. So I don't use alerts either. Same kind of thing. You can set them up on TradingViews. A lot of people like to do that. You can set up your alerts so that it will go off if you reach a certain price point, if you reach a certain RSI. There's some great tools that you can use as far as that goes. So yeah, a lot of people will put, you can put RSI alerts, and then the other thing that we have for crypto is ChartGuys do have crypto alerts that are crazy how well they work out. Somebody did ask me about that too. It is a separate package, crypto alerts, and you can go to the website and set that up if that's interesting for you, if you are trading crypto. We are hoping to get alerts set up in the future for some other names in the stock market as well, just because of how well the crypto alerts have worked out for people. So that's definitely something in the works, but it's going to be happening at a later time. Top fishing and bottom fishing plays. Okay, so a top fishing play is when you have a support or a top fishing play is when you have a resistance, and let's try to get this to show up a little bit nicely without all that after hours stuff. Okay, so here, top fishing play. Facebook had a huge move, went up to 180.13, came back down, established support. Top fishing was knowing that we had that 180 resistance, is opening a short right under that resistance, hoping that it won't break, and exiting if it does break. Okay, so you can see here we ended up setting a lower high. A lot of top fishing plays turn into equilibrium patterns. Bottom fishing play would have been the opposite. We saw that 175 was a clear support. Okay, we were holding it a bunch of times, so you could buy at 175 and then exit if it broke. 175 broke, you would have exited 174.99, so for very little risk on those trades. So they're very little risk, but a lot of them, especially if you're doing oversold bounces or something's dumping or kind of going against that trend, then there's usually a very high likelihood you're going to be stopped out. So whenever you're top fishing or bottom fishing, you have to be very, very clear on yourself that you will absolutely respect your stop loss in that play, and never just say, oh, maybe it'll come back up or maybe whatever. Stop loss all the time. That level breaks, you are out. Level 2. I do not use level 2. Other people in the chat use it so much that I generally don't have to. It's always posted before I could even figure out how to get it on any of my brokers, so I don't bother using it. For high beta names in the stock market, it usually won't really provide anything that you don't already know from looking at the charts as far as support and resistance. In smaller cap names, it's could be useful to see where walls are, but generally once you get to a wall, you can see that just on the bid ask as it is. And a lot of the times I'm not usually surprised by where the support or resistance is. A lot of them, saying that there's a huge ask on, at $35 on a stock doesn't really provide me so much information, because I already know that, certain psychological resistances are going to be there, or key resistances that we've seen on the chart are going to be obviously more there. So a newer person to concentrate on in order to make best use of the site and get up to speed. So I would say the biggest things to do is to make sure you listen to Dan live every day as much as you can. Make sure that you use the whiteboard so that you already have an idea of what he's talking about once he gets to live. So as much stuff as he'll write out in the whiteboards and as much as he'll put out in his videos the night before, We put out videos in the marijuana sector. He puts out videos for the general market. He puts out videos for Bitcoin and Ethereum and Litecoin. So maybe not Litecoin. Probably taken out of his videos now because hasn't been so great. But using the chat is amazing. You're going to see, but it can be overwhelming sometimes as far as seeing a gazillion tickers show up. Maybe it's not something that you're playing. You don't know what to play because there's so many tickers. So I would highly recommend that you pick a bunch of tickers that you want to get comfortable with, that you want to constantly watch, even if that means that you're just constantly looking at them each night before bed so that you know what their charts look like, their supports and resistances, maybe even if it's just playing the names that are in the whiteboard setup, because then you already have a full paragraph of detail knowing what that is. And then when you go in to listen to live, you have that set up in your mind, knowing what you're already looking for. And when you read that first, you have that knowledge in advance. And then when Dan goes over it, it's just going to reinforce everything that you've already read and everything that you've already learned. And so I would not try to play every single ticker that every single person calls out or asks about or whatever it is, because it's going to get very overwhelming very quickly. If you're new here, same, and it goes for every sector, right? So in the regular stock market, there's a gazillion billion tickers, but you can choose to play, or watch, 5 to 10 of them. Same in the marijuana sector, we have a gazillion small names, but you can choose to only watch the big 3 or big 4 and only play those because they always have good plays. Anyways, when we are, when that market is hot, then those names are going to be hot. What signaled me to Facebook puts pre-earnings? Okay, so we never, and this is because you're coming from crypto. So if you are coming from crypto and playing the stock market, the first thing to know is that in the stock market, there is earnings reports, and they come every quarter, and we always know when they are. So if you look on the daily time frame on TradingView, it'll tell you, that little E tells you exactly when earnings are going to be. So you're never caught off surprise by when earnings for your ticker are going to be. There is a video on the website, how TCG plays earnings. And basically it's that we don't gamble on earnings. We play results after earnings because there tends to be a lot of volatility on names after earnings. So you can absolutely play after. Some people play after hours if their brokers allow. Keep in mind that, liquidity after earnings is usually not an issue, but as far as after hours go, but you do need to be aware of how to set limit buys with the extended hours on your broker and utilize that, because you can't market buy after hours. As far as what signaled me to play Facebook, I had already had a good day. I was willing to gamble a little bit of money, not much. I bought one put, and I don't buy anything more than that on earnings, and I generally don't play earnings. It was actually Dan's fault. I was listening to him at 9:30 in the morning, 9 in the morning, and somebody asked about Facebook, and he said Facebook on the weekly time frame is ridiculous looking. It's completely overextended. We run almost $70 in a matter of weeks, and I would be looking for a Facebook short soon. I wasn't actually thinking about earnings, and then I kind of realized it was earnings, and I thought, if there's going to be a big move, it's going to be down. The chances of Facebook running $70 up and then having earnings run at another, $20 up seemed completely unreasonable to me. Any decent earnings would already be priced in. So even if I took the puts, I would be risking probably very little. If I had to even risk the entire amount, I was willing to lose it. And then as far as reward, I thought if they have really bad earnings, then, stuff could really hit the fan and it could be very profitable, which, it went way beyond what I was ever expecting. I remember when it was starting to dump here, and I was just excited for it to be around 200, and then I saw the further dump, and that was just icing on the cake. But we do not play earnings. As a rule, we don't gamble on earnings. And if you do, you are completely gambling, and you are realizing that, you're risking, if you're playing options, you're risking the entire amount that you're playing with. And if you're playing common shares, that you're risking 20% of what you're playing with, because the spikes happen so fast that usually you don't have time to get out. So don't play earnings if you're coming from crypto, but definitely know which stocks you're playing and when they have their earnings, so that you can choose. If it's a swing trade that you don't care, if you're swinging it for months or years, then you don't care about earnings. But if you're swinging it for a couple of days, then you definitely want to know when those earnings are. Why does Dan use stock charts? It's so much uglier than TradingView. Dan uses stock charts because they have a subscription to it, and stock charts used to be the best charting platform in terms of adjusting for dividends, and for SPY dividends that made a big deal. Now TradingView does adjust for dividends. Here you can see that little adjusting ticker in the corner. So Dan will likely let his stock charts subscription lapse when it does. Stock charts also does have access to a few more tickers that TradingView sometimes doesn't, especially on the Canadian exchanges. When watching oversold, overbought bounces, how do you know which time frame to watch for them? So it depends what time frame you're playing. If you're a scalper, you can play a 5-minute oversold bounce. If you're not a scalper and want to play, a bit of a longer play, then you're watching for hourly oversold bounces. Now, I watch all the time frames for them, because an hourly oversold bounce, I want the 5, 15, and hourly all to be oversold at the same time, because that's going to give you the best potential bounce point. So if you have, the hourly oversold, but the 5 is very cooled off already because of trading sideways, then you know that it could be setting up for another leg down on the 5-minute time frame. So definitely like to have the, in terms of playing that bounce, the more oversold time frames, the stronger the bounce likely will be. So I do pay attention to everything. Unless something is in a very strong bull uptrend, that I think that, the first 5-minute oversold bounce usually gives a very strong bounce, I'll usually wait for 15-minute bounces, or hourly, especially if I'm playing the daily time frame. I really like hourly oversold as finding a daily higher low. That's a preference that I like to use for that. Follow up. When there's ups and downs where people are scalping and jumping back in and out repeatedly, how do you know when to stop scalping and when this is the time the price is going to skyrocket and not drop again? So you never truly know that. All you can do is be protective of your position. And this is one instance where, let's say you do get a situation where, let's pick a trade. Okay. Okay, so let's pick a trade where we have, so you can see here on ACB, we have the 15-minute, obviously very oversold. We have the hourly, massively oversold. Daily is now oversold. Okay, so when we were entering this trade today, we saw the 15-minute being very oversold and being aggressively pushed down by the bears. So 15-minute oversold, check. 5-minute was oversold, hourly was oversold, daily is oversold, 4 hours oversold. So everything's oversold, being aggressively pushed down. So what somebody would do in this situation is you can set your target for that 15-minute oversold bounce, especially if you're playing a heavier position, but then knowing that you need to set a higher low and a higher high, which is something that we never really did the entire day. So if you see a push up that has a really nice percentage gain, that's when you can finish your scalping. You can wait for a higher low to form, and then you could re-enter on the higher high for it to play out on a longer term time frame. And sometimes you're just caught off guard, but that's when you have to not care. You're never trying to make the entire move. So let's go find this one, because it did happen. So Let's go see if we can find it here. Not that one. Okay, this move here. Okay, so we had weed aggressively dumped, didn't follow through, dumped the next day, broke that high, and just kept going. And it never stopped. So somebody might have exited here and then been waiting for a higher low that never happened. But sometimes you just don't know. So what you do is you scale out. You don't have to sell your entire stack. You can scale out some, see if the bounce follows through some. By scaling out after you're already in profit, you're giving yourself a lot of wiggle room on your stop loss, and you're not trying to make the entire move. So if you stopped out here and didn't get back in for this portion, that's fine. You have to be okay with walking away with profit and not worrying about that you missed a little bit of the move. The importance placed on SPY. So this is why when I started, I had all sorts of proper tickers set up and now they're all gone. But okay, SPY. If you're playing anything in the market, you want to have your best bet is to have the market at your back. So if SPY is bullish and you want to play something bullish, that's going to make it more likely that you're going to have follow through on your play. SPY is the overall market. Weed, the same thing. If you want to play Canadian MJ name and weed is dumping, you're not going to want to get into something else bullish unless it's an oversold bounce, because weed is kind of the leader of the sector. Or if weed is ranging, okay, weed's getting really tight and you're trying to play a bull break on something else, it's likely going to be stopped short because the sector is not going with it. Same thing for QQQ or XLK. Let's do XLK. That's the one Dan uses. We'll be consistent here. Okay, so tech sector. If QQQ is bullish, then your bull play is likely to have more follow through. If QQQ is bearish, then you're not going to be wanting to play bullish names as much because you know that it doesn't have the sector at its back, and your plays are always going to be stronger if it has the sector at your back as well. Same thing with banks. So if you want to play a bank name, you want to be aware of what XLF is doing because that's going to be all the bank names, and you want to know that that sector has momentum behind you as well. So it's sort of the same thing. And then of course Bitcoin, right? You want Bitcoin to be going in the same way. If Bitcoin's double topping and Ethereum's getting a higher high, then that higher high might not go anywhere because Bitcoin has double topped. So it's the same thing in every sector. They all have the ones that they sort of follow a little bit. How many screens do I have? Well, nobody should follow what I have because up until this morning, I had one little tiny screen that I traded on. I traded from a laptop, a small laptop, not even a big one. Nobody should use my previous setup. I now have my laptop with a screen. I can see a gazillion charts at once, way more than I could have ever hoped for. And I'm already getting, used to it. And I'm already not sure how, when I want to travel around my house, I'm going to trade on my laptop. But there it is. So yeah, up until today, I was trading on one small screen, which will make the next question even more impressive when I answer it. But yeah, everybody has to set their own setup with what they like. You want to be able to see the charts. You want to be able to have your broker set up so that you can do, quick orders and fast clicks to get in and out of what you need to, especially if you're day trading or scalping. You don't want to be fussing around between lots of different things in order to do that. So now I have it set up that I have lots of screens. I have my, trading view chart set up. I have the chat set up and my broker set up all separately. And for me, I don't need lots of charts open on my screen. I can get away with having one chart on my screen as long as I have the prices on the top. So I have, let's say this, and then I have another chart now beside it too with more. I pay so much attention to the charts and I look at them so often and I trade so many of the same names so much that I know what the charts already look like. So I can just be watching for key price points on the top and sort of knowing what that is. But that only comes with experience. And obviously you want to be, having your best setup that's going to maximize for your own place in where you are in your trading. Okay, so I went over time frames for the trade. It really depends on, do I always use limit orders? I market buy all the time. Limit orders, or if I'm placing orders for something to come down to meet that price, if I'm eyeballing where I want it to set, or if I'm selling something because I have a price target in mind. But I use market buys all the time. I use them for oversold bounces. I use them when I think that momentum is changing and I want to stop myself out of a trade. I market. I'm never scared to do a market order. And if you are nervous about slippage, then what you could just do is you can set your limit order kind of at the ask price, and that will make sure that you don't get filled anything above that ask price if you're worried about slippage in smaller cap names. How do I keep track of so many different stocks, cryptos at the same time and choose what to play in a short period of time? So, um, my heart is usually in Canadian MJ. So if there's a Canadian MJ play to be had, I'll usually take that. That's just because most of my money is in Canadian dollars, and so that is what I like to play. I like the volatility. I like how you know how bullish we have been for so long. Same thing with crypto. Crypto, when it was all bulls all the time, then it was easy to keep track of because you always wanted to play it. As far as so many different stocks, I don't actually keep track of that many different ones. I have my watch lists, but I have my favorite ones that I like to play. I usually keep about 10 on my radar all the time, 10 to 12, let's say, in each sector. So in the MJ sector, I'll probably have 5 or 6 on my radar. In the tech sector, I'll probably have 10, or in the regular US stock market, I'll probably have about 10 to 12 on my radar. I just keep track of those charts, and it's not so much of a whiteboard, but I'll use that kind of whiteboard idea where I know what I'm looking for already in those charts. I know if I'm waiting for an entry on them. I know if I like a setup coming on them. And so I then just have to wait for that price to hit or wait for that target to hit. And I don't have to keep too much track of them at every given second. And a lot of times it'll be pretty clear, before the day starts, as I do my whatever setup I do, what I'm looking for. When I do my nightly videos for MJ, I already know what I'm looking for the next day. So I do a lot of planning without meaning to plan. I listen to Dan in the morning. If he says that there's something that he's got on high watch, then I throw it up on my chart so that I can have it on watch too. If I see a daily setup that I like, just because somebody asked me, I rely a lot. Like, people ask me about tickers, and having the ability to help other people look at tickers, I'll see plays that I like. I'll be like, they'll ask me about something and I'll say, "Ooh, I like this one. I'm going to take that one too." Or, "Ooh, I like that one. I'm going to keep an eye on it because it has a really good play setting up soon." That's in my wheelhouse of things that I like to play. Um, so yeah, trying not to get overwhelmed. Like, I don't obviously try to take every trade that people put in the chat, but if something catches my eye and stands out, then I do keep an eye on it. And like I said, like, I just keep a whole bunch open. I know what prices I'm looking for, and I don't worry about missing a trade. I think that's the big thing, is that you can't worry when you're watching so many charts. You can't worry that you're going to miss a trade. You have to focus on the one that you want to make, and you pick out your best setups. So if you have 10, 15 charts that you look at night, you pick out your top 3. You wait for those plays to play out. They don't play out, you skip a trade that day. Who cares? You go to it the next day. You're not trying to get huge whale plays every day. You're trying to maximize your potential for doing good. Entries to look out for beginners. Honestly, equilibrium patterns are the easiest ones to play. So we have some good educational videos on how to play equilibrium patterns. My daughter did a video on how to play equilibrium patterns, which, yes, she's very cute, but it also has really good information on it. You can get that on the Chart Guys YouTube site, and also make sure to check out all the educational videos in the educational section of the website as well. And if you haven't taken the entries and exit course, then I would recommend that too. But as far as entries, I would say if you're starting out, equilibrium patterns are going to be your best bet. Clear support, clear resistance, and those are always going to be the favorite ones to play. Everything else is getting a little bit more complicated as far as entries and exits. Stocks that gap. So if you're uncomfortable, gaps are kind of weird. A lot of time gaps come with news and gaps come with earnings and stuff like that. You don't have to play them. So, if they're gapping up all the time, all over the place, then it's probably not something you really want to be swinging so much as anyways, because it can gap up, gap down on you. There's a lot of like lower cap Chinese names that, they sort of trade with the Chinese market. So they're just gaps everywhere. Personally, like I wouldn't be playing a chart that gaps up all the time or gaps down all the time, because it would be very, very stressful, never knowing where I stand. Setting targets on different patterns. So like I said, I go over that a little bit more in the swing trading video in terms of where I set my targets for rising wedges. That's where the fibs come into play, so that I have something concrete in mind. If it's a bear play, if you're top fishing after a huge move, or if you're doing an oversold bounce after a deep dive, then a lot of times I usually look at okay, there's two things here we'll go over. So where would I look for an oversold bounce? So if I'm playing a big oversold bounce, okay, so let's do this weed one. I played this weed oversold bounce. My entries were slightly early. I had entries in the 32s. I didn't care. I just waited. I added more. I patiently waited for it to start bouncing. We got the bounce first thing. I started taking profit at, where did I start? My first target was 33.48. It was like hourly middle Bollinger Band. So I'll always try to take profit at middle Bollinger Bands after oversold bounces. So if the hourly was oversold, if we hit the hourly middle Bollinger Band, I'll take profit. Even if we hit the exponential moving average, the 8 EMA on an oversold bounce, I'll start taking profit at those exponential moving averages and moving average resistances. And then I'll use fibs for more prolonged targets. And just eyeballing where, let's say, a lower high or a higher low would be on a higher time frame is how I do my targets, or when I'm happy with my profit. Volume climax. Volume climax kind of comes with experience. It's just this noticing of when you're seeing increasing volume, and then you see this candle where it's like you're already at over half the previous candle, and it's just, you can't possibly imagine how another candle after it could have more volume than it could before. And then you start getting that buying pressure or selling pressure, depending, when it just looks so blow off the toppy. But it's more of an experience thing in terms of volume climax, of seeing it coming. Kind of becomes this like real battle at the top or bottom between the bulls and the bears. You can start seeing on the 1 minute that buying pressure, and you can kind of tell that the volume just can't possibly go any more than it just did. Okay, last one is descending and ascending wedges. When are they negated after confirmation? So what I find is that in terms of wedges, all wedges really are usually is that it means that you're topping out on one time frame, and so that you're needing to look for your higher low or your lower high on a larger time frame. So if I see something that's getting very wedgy on, let's say, the 15-minute time frame, we can see that it even was here on weed. Okay, so actually this is going to be perfect. Okay, here we go. Weed. Oh, you know what looked even better? Let's go with this one. I like this one better. Okay, so we were expecting, I don't want to turn mine. So we were expecting on TLRY to see an equilibrium after this massive breakout and a big dump. And so I pointed out that I think it was the hourly time frame. So we knew at some point we were looking for that higher low on the 4-hour time frame. So what happened was we ended up with a wedge here. Not even knowing if I'm seeing it anymore, but here we go. There was a wedge. Oh, I know why. Okay. So there was a wedge here. And it's because it was here. We actually broke it here, and then we dropped to that low, which I kind of talked about. But basically what happens is you get to that wedge, and then the bear breaks cease to have huge follow through anymore. And those wedges tend to be the bottom of them where your higher low is for that bigger pattern. And so usually my targets will be something like fibs. Some people talk about a target the entire height of the wedge minus 10%. So, on this one, you could be looking for a full retrace back up to like that 30 level in terms of setting targets. So if I see a wedge on the 15-minute time frame and I see that it's about to break bearish, then I'll say, okay, I'm looking for now an hourly higher low. So it's not so much that they're negated if they're confirmed. It's just that the break of them usually just means that you're now looking for your higher low or your lower high on the higher time frame. What does volume climax imply for the next minutes? Usually it just means that there is some usually what it means that the next candles are going to have lower volume, and usually it'll be consolidations or a bounce. So, if you were severely overbought, it might mean that the top is in. It just means the temporary top or bottom is in. It doesn't always mean that, but it means more often than not that you have a little bit of cooling off to do right after that. Post or pre-market limit orders never trigger, and today price action blew through my stop twice without triggering it. Okay, so pre and post market limit orders, there is usually, for most brokers that I've seen, there's an option that you have to click that it's not just good for the day. It has to be clicked good for extended hours or day plus extended hours. Every order will have it differently. So you need to make sure that that's clicked if you want it to be pre or post market. The second one is that you cannot use stop losses on pre-market or post-market trading. You could only use limit orders. So if your stop losses are not triggering because of that, then that's why. And the other reason for stop losses not triggering would be that you have a stop limit that is too close to your stop price. And basically that means that you're only going to be filled at a certain price. And so if you're not getting filled, you need to make your stop limit slightly lower so that you will have more chance to get filled. Because if you have your stop loss at a place where lots of people have your stop loss at, then you need to give yourself a little bit of wiggle room so that you can get stopped out properly. And yeah, that's that. Okay, and the last question that I will go over is as far as stop losses, and my daughter also did a video on stop losses, so you can always check that out as well. Stop loss, always use a stop loss. So even when we're playing these oversold bounces and we say that we're not using a stop loss because of it, that's because we're scaling in. Now, scaling in and averaging down they're kind of the same, but they're kind of not. So averaging down on a losing trade means that you probably should have stopped out, but you didn't. Whereas scaling in is expecting that you don't know where the bottom's going to be. So you're going to continue to add, and that's all part of your initial plan. So I don't consider averaging down. When people talk about averaging down a losing position, usually they end up putting more money than they wanted to into the position. Whereas scaling in, you have a predetermined set that amount of money that you want to put into a trade, and so you set it in, 2, 3, 4, whatever, however many different scales, so that you will get as close to the bottom as you can without getting it in. And as far as a stop loss goes, I might continue to scale into something and not use a stop loss. But once the bounce starts going, and you need to put in a stop loss. So, as it's still aggressively dumping, maybe you're not going to put a stop loss because you know that there's going to be a bounce at some point. But as soon as you start to bounce a little bit and those RSIs start to cool off a little bit, you need to start thinking about where your stop loss is going to go, taking profit, putting it below the low, whatever it is, because as soon as it cools off, it can be a bear flag and be setting up for another leg down. So always wanting to be protective of your trades. And I think that is that. So welcome to the chart, guys. If you're new, I hope that this helped people who are not new and that they got some good information out of it. Feel free to keep asking questions, and more often than not, somebody else has your question too. So don't feel ever afraid to ask something in the chat. We keep our community really, really, really nice and really healthy, and everybody is very involved in answering, and everybody is very wonderful about answering. So enjoy the community. Thanks, guys.